Hello, investors. This is Ted Zhang, portfolio manager at Revere Asset Management. Today is Wednesday, March 19th, 5:02 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we are still in a moderate correction below all key moving averages, and therefore we have the red arrows in the short and medium term on the trend gauge, and right now we still have the neutral for the long term, so we are giving it the buffer, as I said last video. But if we do continue to trend downward, that will flip to a red arrow as well. Market leader still with the red arrow, but we do have that yellow neutral arrow potentially shifting to neutral. What happened today? Fed leaves rates unchanged. Markets rally but close weak. 21 over 21 list up 1.63%, 14 up, 3 sideways, 4 down, big 8 up 1.96%, rebounding a bit from yesterday. But I'll still show you the charts. They still are quite bearish. RG8 up 2.08%, S&P up 1.08%, RSP down up 0.74%, QQQ up 1.34%, QQEW up 0.84%, Dow Jones up 0.92%, mid caps up 1.23%, small caps up 1.57%, global 60/40 equities bonds up 0.6%, and GROTECTION up 0.23%. I want to remind everyone that when we are in a correction, oftentimes the biggest days are found on the up days. And we'll look into the action now, starting off with the S&P 500. I want to showcase this weekly chart for you. We broke this upper trend line, and as I talked about the stage analysis with the key moving averages and their slopes, they're starting to all slope down now. And what I see here is massive distribution on these weeks, followed by 3 more weeks. And now we're starting to have this wedging pattern. I could see us potentially wedge another week up here, maybe a fourth one, and then results to the downside with all those moving averages catching up. On the daily chart today, we did make higher highs briefly today, but then closed the week. Volume was lower than average, so no follow through day. What happened was we gapped up, pretty much based for most of the day, and then had a nice uptrend into and through FOMC, followed by a weak close after Powell stopped speaking. Like I talked about before, if you just compare this cycle from the lows to the highs, that's about over 2 years. The previous COVID lows, which is down here somewhere, to the highs, that's about 2 years. You look at the slopes of the 10, 20, 30, 40 week moving average. Good markets happen above all key moving averages. Bad markets happen below all. And right now, we are below all. So that is definitely a concern. And there's some just massive distribution in the tape as well. RSP, looking at this, also closed below the 200-day moving average, pretty much closed right on top. But looking at the weekly, broke this upper trend line and looks like we're rolling over the stage 4 as well. QQQ, same thing. Broke this upper trend line into stage 4. 10 is below the 20-week. 30, 40 is flattening and looking to turn down. When the last time we saw that was over here when 10 crossed below the 20, 30, 40 started flattening, and then we've had this full blown bear market. Equal weighted index, same thing, living below all cumulative averages as well. Dow Jones, same thing, living below the 200-day, or sorry, the 40-week moving average. Today, briefly reclaimed the 200-day, but then rejected that 42,000 level. All I see here is high volume sell-off, low volume rally. That's the same thing with the QQE. High volume sell-off, low volume rally. We go back to the Qs, high volume sell-off, low volume rally. And that's the will show the same thing. High volume sell-off, low volume rally. And that is typical bearish action. On the flip side, on the bull side, you want to see high volume rallies with low volume consolidations. And we just don't have that right now. The character of the markets have changed. Mid caps, same thing. There's no volume, but huge breakdown, rallying to the 21 so far. Still hasn't even gotten back above. Small cap, same thing, extremely weak. One thing I want to showcase actually, let's use a QQQ, is an inverse chart. And when I do that, you can see sometimes it's easier to see bullish patterns. We broke this downtrend line, huge 3 weeks up on volume. So far, pullback, tight week so far on lower volume than last week. You can see the 40 week is starting to flatten, same with 30 week, and that those are both looking to turn up. The 10 is above the 20 as well. So I could potentially see this backfilling here, maybe back to 490, 495. That will give opportunity for 10 and 20 catch up, cross through the 30, 40, and then we may get full bearish alignment. That is the scenario I am looking at. Of course, we can reclaim and chop around and then continue higher, but the probabilities right now say point towards lower prices. VIX actually closes below 20, which is a good first sign, but we're still not out of the woods yet. Volatility is still here and present. Dollar initially rallied, but also closed weak. Yeah, this trend continues here. Big break in the dollar. Gold, a new all-time high. Just great action from gold. GDX also open weak, close strong. Typical bullish action. This is what you see in bull trends. You see, you have low volume consolidations, high volume rallies. You can have some weak closes or weak opens followed by strong closes, and that is what we find in a bull tape. Silver as well broke out this cup with handle, just doing its own thing. Still healthy action. Bitcoin, I want to talk about Bitcoin real quick. On the weekly, it reclaimed the 30-week moving average. On the daily, it reclaimed the 200-day, 10, and 20. So this is the short-term trend is starting to flip. Perhaps we can push up to like 90,000 area and meet the declining 50, and that will be key. But Bitcoin is showing relative strength to equities and other assets here. And this is still in the longer term uptrend above a rising 30, 40 week moving average. Bonds, after the FOMC announced its interest rate decision, yield started falling. 2-year ended up down 6.7%, 6.7 basis points, 10-year down 3.8 basis points, and bonds rallied as a result. So we will see what happens there. It is technically a news failure because if we have higher, actually we'll get into that later. So yeah, that's it from the inter-asset correlation. And now I'll jump into the tail of the tape. Still in a moderate correction, VIX is down below 20. CNN fear increase, still in extreme fear at 22. We're still operating under the bull case, below the 21 EMA and actually below all key moving averages except the 8 EMA, which we reclaimed today. For news, FOMC rates remain unchanged at 4.25%, 5%. I'm going to drag the tail of the tape to the side for a second. It looks at a few tweets. So they made some revisions to their 2025 economic data projection. Cuts 2025 GDP growth projection from 2.1% to 1.7%. So growth has been revised lower. Unemployment at the same time has been revised higher from 4.3% to 4.4%. PC inflation also raised 2.5 to 2.7. So that is a bit stagflationary at first, but Powell did say he does not believe we are in that 1970s high inflation, stagflation environment yet with the current data. Continuing on, Bob Elliott had this post talk about inflation being persistent, still above the 2% target, but the Fed is projecting another 2 rate cuts this year, which is contrary to getting inflation back in line. The 2025 projections show inflation is going to be at the 2.5 area or 2.7, 2.8 area, and we'll only get back to that 2% inflation by 2027 based off their projections. Continuing on, another important thing to point out is that they are reducing their QT, their quantitative tightening, reducing the monthly runoff from 25 billion to 5 billion. This does not mean they're selling off their treasuries, but just when they mature, they're letting them go off the balance sheet. So with that being said, let's go back to the tail of the tape. S&P ATR is still elevated. Sectors For some reason they're missing, but yeah, most sectors are pretty strong today. We can go over them in a second. We added some SSO today above the 8 and a higher high. We do have a tight stop on that. We added some Netflix and RBRK as well. Beta is still low, 0.55, minus 1.99% open heat. Bottom line is Fed leaves rates unchanged and markets rally, but close weak. So let's go talk about some sectors real quick. I want to show you something cool in deep view. I have a sector performance watch list, and the strong sectors up today were discretionary and energy, tech. Individual sectors, Bitcoin did well, Bitcoin miners, uranium, FNGS. On the downside, not too many sectors did poorly. Silver pulled back a bit, China as well. And for S&P, just staples. So that's it for the sectors. And now let's talk about the 21 over 21 list. Actually, let's talk about max first. I still think this is extremely weak action here. Building kind of like a bear pennant. Below this level would not be good. Above this, maybe we rally up into here. 50-day comes and meets it, and then maybe we continue down lower. 21 over 21 list, I'll just quickly go over the top names. WGS was a standout, up 7.3%, reclaimed the 21 EMA, and really has a solid downtrend line right there, along with the 100 level pivot. TGTX, another biotech name with earnings and sales like WGS, which was a diagnostics company. TGTX has a drug for multiple sclerosis, and this makes a new high today. So this is clearly showing relative strength. NTNX up 3.8%, reclaiming the 21-day. Still pretty sloppy chart, but just point out some relative strength here. Spot as well, relative strength. Held the 50-day, reclaimed the 21. 600 level remains key. Dash, another one, reclaimed the 50 and 21. This looks like a run up to 200, but still a little bit sloppy action, but definitely showing relative strength. AR, coal name, continues to V-shaped recovery off the lows. 51.43, 41.53 is the top of the base and a key level. RS line new high, blue dot once again. Palantir, this broke down hard, so we're watching it because it still has a 99 RS, but RS line is well below the previous highs, and we're kind of just meandering about here. This huge break, barely rally on lower volume. This could just resolve for the downside as well. Lemonade up 2.2%, really just doing nothing here. It really just needs to clear that level. RBRK, a name we bought post earnings gap. We took this because it keeps holding the 50-day, just starting to turn up. 21 EMA is turning up as well. Okta is beautiful post earnings gap action. Gapped up, pulled back, flag broke out, and now it's flagging again. Typical action here. Gold miners, great action. Weak open, strong close. And then on the downside, KWeb just puts another tight day, so nothing wrong there. BJ is more of a defensive name. Staples, putting in just the flag post earnings. DE, just getting tight there. SLV, silver continues to act well. YUMC, after its breakout, just kind of floating higher. Nothing too much to say. So on the downside, not too much breaking down. On the upside, stocks are holding up and reclaiming some key moving averages. So the 21 over 21 leaders list is acting well. It's just not the greatest to see names like NVIDIA into stage 4, BRT into stage 4, A-Lab into stage 4, Reddit into stage 4, at huge breakdown from the highs into the stage 3 topping area. Palantir is kind of in stage 3 top. VST is in pretty much in stage 4, stage 3 top area. CEG as well into stage 4. So as Justin Livermore says, keeping track of the leading stocks is critical because we've seen a lot of these previous leaders break down and are unable to recover. So that's definitely the harbinger for maybe potential. Well, it was a harbinger for this current market weakness as they corrected first, but we'll have to see. We currently are able to come up with names that are relatively strong. The question is, is the strength and breadth of groups right now strong enough to bring the market back up? And we're just taking it day by day. So with that being said, we'll wrap it up for this video today. If you're interested, you can email me at ted@revereasset.com. My Twitter is Ted H. Zhang. Our phone is 855 Real Wealth. That's 855-732-5932. Website's revereasset.com and YouTube's also Revere Asset. If you're interested in becoming a client, please reach out. And with that said, this is Ted Zhang, Portfolio Manager at Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week.